Hi, what is today? Today is November 13th, 2017. I'm going to be posting my 6-week swing trades, the stuff that I found this weekend from 11/10/17. You can see in the top here, it's IVC, HDP, CDXC, or CSIQ, FNN. Okay, I don't feel like reading them all. These are the stocks. You can always download the Momentum Bro trading checklist. Essentially, it's going to teach you how to avoid risk management, or how to avoid bad risk management, how to avoid over trading, and give you a simple process so you can avoid some style drift if you're just getting started in the markets. You're also going to see me using the Momentum Bro trading playbook. This isn't currently available. Actually, there may be a link on the site somewhere if you can find it where you could buy this for $10. It'll be emailed to you. It's just going to essentially be really, really easy. You're going to see me set this up inside of the actual video here. So let's just get started. The first stock that we're looking at, let's just pretend like we're going to take positions in all of them. The first stock that we're looking at is IVC. I would look at this stock. I don't even know if I would trade it, but since I'm not really worried about that, I'm really more worried about if my risk management is good, and I know that it is. What I would do is, let's say I bought this at 720 because that's what the close price was for, let's say it was for last week. The close price was 1614, which is actually pretty nice. So let's say it was 1614. Let's say I didn't get in until today. Let's say I got in at, it opened at 1559. That was pretty nice. Let's say that I was going to be trading this stock. I'm not worried about if I was actually going to because I feel very comfortable in my risk management. The way this spreadsheet is set up, I don't really have to think that much anymore because I've spent the time building my system. But let's say we had traded this today. We're not going to take the high because that's too high. What we'll take the close at 1720. So that put us, the purchase price would be 1720. We'd put the current price is 1720, and we would look at the ATR and say it's 1.624. If you're wondering where I'm getting that, it is right here. It would give us a stop of $14.57. We would have a total risk of $50, so we would actually buy 19 shares, about $327 worth. And then these would be our additional pyramid positions. So if it closes above 1923, we'd buy another unit. We'd buy another 19 shares. If it closed above 2126, we'd buy another 19 shares. And if it closed above 2329, we'd buy our final 19 shares, which would put us, that put us at 76, put us at, let's probably, I'm not sure what the average price would be. Let's say if we got perfect execution, that would put us at 1720 plus 1923 plus 21.26 plus 2329 divided by 4, put us at about 60. That doesn't make any sense. So we would have to look here. Being for an average price of 2024, so 2024 times 76. Put us at about a $1,500 position we'd have moving with, at that time, $200 stop, which I think is very reasonable. Let's see what our next option was. HDP. We'll switch. I know the reason I'm making this video is because I know a lot of people follow these individual stocks. They're actually pretty good stocks generally. So I know that there's at least going to be somebody who's like, oh, I want to know where should I place my stop. Say we got in, close price would be 1834, 1834, 1.528 is the ATR. We would be going in big. Actually, nope. Did the ATR wrong. That's why it's important to make sure you check your numbers. We'd be going in for about a $20 or a 20 share position, about $370. We'd have our additional pyramid positions where we'd be proven right. We'd have our stop at 1587, which seems very reasonable to me. Let's see, what would be the next one? CDXC. It's actually very simple when you have a written out process. If you can see how quickly we could go here if we wanted to really break down an individual stock. We'll just do 5. See, this one right here has a very small ATR, which allows you to take a much larger position relative to the amount of shares, which is always very exciting. You can take 50 shares, which would be great because it's just nice to have a larger position, especially if it's going to be breaking here. If it can break and clear above this weekly high of whatever it was, I don't know what that was, but it looks like 1561, which it already has broken and closed above. If it can hold that for the week, that is a great signal. That may be a wonderful stock to be in. Let's go to CSIQ, which is a stock that was actually on our trading watch list last week. So we would have taken a position in it last week. Let's see if we're going to do another $50 position. What is this, 1774? Then we got 154.3. You can see we'd have actually a nice position here, about 20 shares. Again, you can see exactly what we would be doing in each of those positions. Go to the next one. We are running out of time a little bit. We don't want this to be too long. Let's go 38.52, 38.52. See, the hardest part is that you may actually just mess this up from time to time. But the fun part is actually the trading. So this one is actually really nice. So because it has, so you see here, this one would actually be much larger in its weight of our position of our account. It's still 20 shares. We still have the same amount of risk that's available. But you can see this one, because it's a higher price, is definitely going to command a little bit more. This one was on our trading watch list weeks ago, right when it broke out here. That's actually amazing that it's continued its progress, which is wonderful to see. Fidelity National, right now, I will admit, in 2017, you may be a great stock to own at the end of the year. See, the further we get into this list, the better these stocks are, because that means that they've been on the list for a while. These new ones here, like IVC, HDPD, CDXC, those are I think their first week on the list. So let's look here. I know we would have been in ESIO. I know, because we all need one of our paper trading accounts just as a place that we can test. We have 2254. Let's say we're at 2254, and then 2.151. So you can already see that this individual ATR is actually the highest ATR that we have currently. At 2254, our stop would be at 1906, but that ATR is twice as large, so that would have cut the position down than what it normally would have been. You can see it's even got, it actually has the lowest amount of shares that would be possible, and one of the smaller positions. It might actually be the smallest. It is the smallest position up to this point. Actually, the CDXC would be larger or smaller, but it's all because of that ATR. The larger the range, the smaller you have to keep your position, because the risk is so much greater. NRG. Let's go to NRG, one of my darlings of 2017. There's a lot of choppiness, so I usually don't like to ride that kind of chop, but that is a beautiful chart, because you know that there's buyers all in here that are just going to support it. So you're just going to have this base of buyers and just upset people who, if they sold here, they're like, oh, I wish I'd have gotten back in here because I wanted up here. So you know you're probably going to have people who are just thirsty, just jumping back in to try to chase some of those gains. Let's see if we're going to do this. It's a very simple method, as you can tell. At Momentum Bro, we don't teach anything that's really complicated. We just need the price and the ATR. We encourage you to trade on a weekly bar because we have day jobs. We like what we do. This is just a way to enjoy a hobby outside of work. So this is really an opportunity for you to learn how to be able to trade very, very slow, but at the same time, just make money, right? Like these positions, I want you guys to look at these like weeks from now and be like, oh, would I have made money or not? I'm not saying you're going to make money in every single position. What I'm saying is the formula and the process itself is going to protect you and is going to give you it as an edge. And the more you play your edge, the better it gets. Is it AY? Oh, see, and this is just a new breakout. Like this is like this IPO'd in 2017. Like there's nothing that you can see here. That doesn't mean you shouldn't buy it. It does not mean you shouldn't buy it. What it means, if anything, is you just need to be careful to understand that like it could be trending and it could not be a real trend. It does have a huge ATR though. I mean, that is a big one. That's going to keep your position size pretty small. And it's going to really make your stop at least pretty well down there. I mean, the stop at 2164 is nearly at the 10-week moving average, which is actually a great place to be, especially when it's just bounced off the 50-week or the 30-week. You don't actually know where the 50-week is because it's completely undefined, because there hasn't been 50 weeks for the stock yet for it to generate that. But, you know, the information is available mostly from the ATR. So you can figure out what you want to do. Let's go back to LNW. This one, sometimes they just dazzle. 538, 583. And then, and this ATR is so small, you can have such a nice size position. If you'd been able to get in and hold through this, because it probably would have been a little bit tighter of a stop, you can just maximize gains here because it's so solid. It's just so solid. It gives you, when any little bit of momentum just drives you through. Like if you would have purchased, I mean, even let's say we would have picked here. This is just purely hypothetical. Let's say we would have picked here, and we're going to use the closing price of 323 here on May 8th because that's what we would have cared about. Let's say we put in $50 just like everything else. The closing price here on May 8th was 323. The ATR, I'm just doing this live so you can see that this is actually just solid, is 0.34. So this would have put us, this stop would have been at $2.67. Did we get down there? No. Like the lowest close here, the lowest close was $2.82. You would have held through this, even at this highest point with this chop right here, you'd have held through this, and you'd still be enjoying these gains. And you'd have added to the position here at 367, 410, and 454, which it very clearly breaks since it's up at 583 right now. You would have added to this 4 times. You'd have a position size. I don't even want to do the math of where you'd be, but this is what the system is all built to do. It's built for you to be able to take a position in a well-trending stock, allow volatility, and still be able to capture the rest of those gains, which would have put you, I mean, let's say we got in here at the very, very top. It still puts you up 81% over the process of, how many weeks is this? 27 weeks. I'm not saying this is going to be perfect all the time. I'm saying that ones like this, Limelight Networks, that's what's going to pay for all of the other times that the rest of these stocks, some of these are crap. I don't know if these are good or bad. All I know is that my risk management and my ability to hold on through the chop and add with discipline when I need to is going to make up for all of these other potential losses and is going to make me a much more robust trader. So if you have any questions, you're interested in finding out about how to do this, go ahead and go to momentumbro.com. Go ahead and get the Momentum Bro Trading Checklist. We show you how we find stocks. We show you how we set up our spreadsheet. We show you how we track and we actually trade. We tell you step by step how we do it week in and week out. Go ahead and go to momentumbro.com to find out our weekly picks and check in our 6-week swing trades. I hope to see you soon.